Welcome to Khanix, your global audio mentor. Let's cut through the noise. When we talk about a conflict between the United States and Venezuela, most people think about politics or oil sanctions. But for us, the investors, the traders, and the business owners, this isn't about politics. It's about the flow of money. If the tension between the US and Venezuela escalates from sanctions to an actual blockade or military confrontation, it won't just be Caracas that burns. The entire global economy will feel the heat. We're talking about a shock to the energy markets, a spike in inflation that hits the working class hardest, and a reshuffling of trade alliances that could isolate the US dollar. Today on Khanix, we're breaking down exactly how this conflict hits hard on global business, why oil prices could go ballistic, and what you need to do to protect your assets. Number 1, the oil shock, the heartbeat of the economy. The first and most brutal hit will be energy. Venezuela sits on the world's largest proven oil reserves. That's not an opinion, that's a geological fact. For decades, they were a top supplier to the U.S. If an open conflict occurs, let's say a naval blockade or an attack on infrastructure, Venezuelan oil stops flowing. But it doesn't stop there. The domino effect. The U.S. might try to fill the gap with its own shale oil or strategic petroleum reserves, but the fear in the market drives prices up instantly. When oil prices spike, the cost of transporting goods, food, electronics, raw materials spikes with it. Global business impact. Manufacturing becomes expensive. If you run a business that relies on logistics, your margins evaporate overnight. Trading impact. Energy stocks, XLE, USO, would see massive volatility. Smart traders will bet on chaos, while long-term holders panic. It's not just about the supply of oil, it's about the perception of instability. The markets hate uncertainty. Number 2, the sanctions war and the dollar trap. This is where it gets interesting for the financial sector. The U.S. has already used sanctions as a weapon against Venezuela, freezing state assets and blocking oil sales. If this escalates to a war footing, the U.S. will likely tighten the noose. The impact on global banking. Banks globally are terrified of U.S. secondary sanctions. If a bank in India, Turkey, or Europe deals with Venezuela, the U.S. can cut them off from the dollar system. This forces global businesses to choose. Do you do business with Venezuela and lose access to the U.S. dollar, or do you cut ties with Venezuela to survive? This fragmentation is terrible for global trade. It slows down transactions, increases compliance costs, and pushes countries to look for alternatives to the U.S. dollar. Reference. Keep an eye on outlets like Bloomberg and Reuters. They frequently report on how banks like Credit Suisse in the past or others have frozen assets due to these tensions. Number 3, the regional fallout. Latin America in crisis. A conflict doesn't respect borders. If Venezuela destabilizes further, we're looking at a massive refugee crisis affecting Colombia, Brazil, and the Caribbean. Labor markets. Millions of skilled and unskilled laborers fleeing violence create labor surges in neighboring countries, depressing wages in the short term. Trade routes. The Caribbean is a major shipping lane. Naval patrols or conflict zones disrupt shipping routes connecting North and South America. This leads to delays in supply chains. Remember the supply chain crisis of 2021? Imagine that, but focused on the Western Hemisphere. Number 4, the petro factor and digital evasion. Venezuela was one of the first countries to launch a state-backed cryptocurrency, the petro, to try to bypass U.S. sanctions. If the conflict escalates, Venezuela will likely double down on crypto and illegal gold sales to fund its operations. Business angle. This puts crypto in the crosshairs. We might see stricter regulations on crypto globally as the U.S. tries to stop Venezuela from moving money. Trading angle. Gold prices often rise during geopolitical uncertainty. Traders historically flock to gold, GLD, and silver as safe havens when the US dollar or oil markets get shaky. Solutions. How to protect yourself. We don't just give problems here at Khanix, we give solutions. If the drums of war beat louder between Washington and Caracas, here's your game plan. 1. Hedge with energy and gold. Don't be naive. If a conflict breaks out, inflation follows. Look into commodities. If you can't trade futures, look at ETFs that track oil or gold. They act as insurance when the stock market gets shaky. Number 2, diversify away from the US dollar. The financial weaponization of the US dollar is making other nations nervous. Keep a portion of your liquidity in hard assets, real estate, precious metals, or other strong currencies to mitigate the risk of a weakening dollar due to prolonged geopolitical tension. Number 3, focus on domestic sectors. In times of foreign conflict, homeland security and defense stocks usually rally. While I hate to profit from war, the market is amoral. Keeping an eye on the defense industrial base is a prudent move. The cost of conflict. The bottom line is this: a US-Venezuela war isn't just a regional skirmish, it is a stress test for the global financial system. It exposes the fragility of our oil dependence and the weaponization of our banking systems. For the average person, this means higher gas prices and higher grocery bills. For the investor, it means navigating a sea of red numbers and volatility. Stay informed, stay rational, and look at the data, not the headlines. This is Khanix. Listen while driving, gym, cooking, or chilling. No need to watch, just let this truth hit you. If this truth hit you, hit like, share with someone busy but broke, subscribe, and turn on the bell. New Real Talk drops every week.